welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our live feed and we'll have your questions addressed by a technical analyst. But before bringing our guests on board, let's see what the global handover looks like, because right now it looks like a complete bloodbath as far as Wall Street handover is concerned. US stocks suffered their worst day since the beginning of the pandemic. Dow tanked more than 1,200 points while the Nasdaq tumbled more than 5% overnight as hotter than expected August inflation data spooked investors. However, US futures are mildly in the green, but Asia slides at open and the SGX Nifty is hinting at a crack of nearly 2%. European markets too head south in reaction to hotter than expected US inflation reading for August. Stoxx 600 shed 1.5% as most sectors and major bourses slid into the red. On Wall Street, the Nifty reclaimed the 18,000 mark yesterday after 5 months, thanks to sustained inflow from FPIs and positive global cues. But as global markets lost steam after news of US consumer prices staying stubbornly high in August, how will our own markets react? And stocks in the spotlight today are KEC International, Bharat Forge and Amara Organics. Okay, let's get going and talk technicals with our first guest, Rajesh Palvia, joining us from Axis Securities. Morning, Rajesh. Looks like it's going to be a tough day for investors on D Street as well.
Good morning, Karanya. Yeah, it's going to be a gap down opening. So it's a tough day for market again, because again, we are, seeing the same kind of behavior in the market. Again, we are, reclaiming above 18,000 level and this again gap down opening. So it's again, we are going to open around 17,700, 750 zone, which is immediate support area for near-term setup. But if we look at the data setup, in the previous trading session, most of the put writers were aggressive at 17,900, 18,000 strike. So that they need to cover the position after this gap down opening if it at all happens around 17,700 or 750 zone. So that will give a cascading effect on the market and maybe some more pressure we can see after opening. And for after opening, 17,700 is very important level. If he breaks that level, then further more selling pressure we can see during the day itself, and maybe possibly Nifty can slide further towards 17,600, even 17,550 level. That is the major support area for the Nifty for this trend which we are seeing since last 2-3 months. So that is very important. 17,550 is very key level, very important and key level for this any kind of further more corrective action. On the higher side now, if Nifty not able to cross above 18,100, 18,150 zone, it's going to remain in the range like 17,550 on the downside, 18,150 on the higher side. So this could be the possible consolidation range we can see going forward. Again, we are going to give the reaction on the global cues only, because on the domestic front, most of the sectors have performed and the setup for most of the sectors are on the bullish side. So buy on dip should be the strategy. Those who wants to buy for short term, they can use this dips as a buying opportunity. Buy around 17,500 to 17,700 range. This is the good level to buy and accumulate again good quality stocks, because market is giving the opportunity again to buy good quality stocks and this kind of gap down opening. So our view is still bullish. We are hoping that again market will settle down at the lower level and we will see again retracement on the higher side.
Okay, all right. We also have Sanjeev Bhasin join us from IIFL Securities. Let's bring him on board as well. It was a complete bloodbath as far as the global handover is concerned, Mr. Bhasin. US stocks have seen their worst day since the beginning of the pandemic. What kind of a rub-off effect do we expect for ourselves here? And can we also see once again making a U-turn and going back to June levels, June lows? Or do you think that this is just going to be a temporary blip and the uptake and the upward trajectory for D Street will continue?
Yeah, good morning, Karunya. You are getting far too pessimistic, and firstly, one day's knee-jerk reaction may be really overdone. Look, we all know that the Fed, the US and Europe are seeing the worst type of performance because of, if it was not energy, it's a food inflation level. But India continues to stand out in all this gloom and doom. And it's not only the stock prices, it's the macros and the micros both. Whether it's your food inflation, whether it's your economic recovery, whether it's your car waiting, whether it's your domestic travel, whether it's the FM, who's saying, why aren't you putting money in PLI when foreigners are there? So I can't but be bullish on India. Now, in the short run, the market has moved all the way from 15,200 to 18 or 200 almost in 2 months, parabolic run. You could see some sort of weakness. But the biggest elephant in the room are the FIs. They have the maximum feeling of missed out, and all declines will be buying opportunity. Yes, it seems scary when you see the screen, but that is going to be temporary. If you don't get weakness, then how will you buy good stocks? Because greed and fear is perfect here. At 15,500, there was extreme fear. If when I last came on your show, and at 18,000, there is the feeling of missed out, humongous. So I think all declines will be buying opportunity. 17,500 is something which you can test as an aberration to what the Qs US was doing. But I think the US Qs were grossly misplaced and maybe a one-off. We have the Fed meet on the 21st, 75 basis point is already priced in. And I think we'll take it with a pinch of salt that these are opportunities which don't come every day.
So you're saying you will use this opportunity to buy on dip if at all there is any weakness in the market. So what themes or what baskets will you be eyeing? Because, we've seen across the board run up in the recent past. Last 3 months have been quite upbeat and quite optimistic. So if, let's say, there is a slight pullback in the markets, which pockets will you be eyeing?
So clearly, financials and consumption seem the best place. We've seen that bank Nifty, by the way, Karunya is outperforming. It will hit new highs before the Nifty does, because 41,700 is very much on the card. Yesterday, we are almost knocking at the door of 41,000. And I think that banks, if I named a few, Federal Bank, Kotak Bank, Union Bank, these are three of our preferred picks. Some of the financials like Piramal Enterprises, AB Capital, these are showing very good color on the NBFC front. And you have, select pockets of OEMs like Bosch and Bharat Forge, which we think can be outperformers. But it's clearly going to be financial, consumer stocks. You can take autos in that. You can take consumption in that. All these will be raring. And not to forget reality. We think DLF, Godrej Property are going to hit new highs. And that will be the, set the cat amongst the pigeon as we head towards Diwali and new highs on the index.
Okay. And anything that still looks overvalued or little alarming to you, something that one should still avoid? Most people we've spoken to, the consensus looks like it's an avoid for metals. But do you have any of these names or any of these baskets that one should still continue to avoid?
Yeah, so strength in the dollar meant that metals underperformed. But just see the numbers yesterday. Foxconn announcing a big semiconductor plant with Vedanta. Who says domestic growth isn't coming back when Vedanta is going to invest? Putting his money where his mouth is. The only underperformer continues to be IT, not because of valuations, but because of ownership. FIs were fully loaded in January. Now, after a 40% fall, they are underweight because of the consensus that high inflation will see issues on wage inflation, and some of the order inflows as far as outsourcing could be subdued. But like I said, there's a lot of room on the pricing front in IT, and none of the companies have guided lower. So we think if you are contrarian, then IT gives you the opportunity. Metals, according to me, being a proxy will be a good entry point, given the type of outlook a lot of them have. But some of the discretionary stocks could be slightly avoided because of the high valuation.
Okay, all right. What about, our own macros? Inflation number was fairly high. Even the RBI looks like, there is still, going to be some aggressive rate hike by the end of this year. Most of the people on the street are factoring that in as well. So talk to us about how are you sort of interpreting and digesting all of these macroeconomic numbers in the backdrop of equity markets? How will markets pan out, and how are the interest rate hikes? How is the inflation numbers, etc., likely to play out for the rest of the year?
So, Karunya, take it with a pinch of salt. You've seen that the Fed has been behind the curve. Last year, they overstressed when printing money. They didn't analyze inflation will bite, and they thought it will, it will come down. And now they have no other cue but to keep raising rates. Whereas our governor has acted extremely prudently. We didn't do any package. We just we just cut interest rates by 90 basis points, which we reversed quickly in September. And we think that we are in a very, very sweet spot. 50 basis point is not going to do anything much. You've seen how credit and demand is. You've been, hopping at some of the restaurants in Delhi and whereabouts and tasting the food. And that tells us that how much the pent-up demand of reopening is there. People want to go out. They want to visit. You've seen airports be chock-a-block. You've seen restaurants, hotels. Indian Hotel, by the way, one of our top picks, is hitting new highs. So I see too much of robustness rather than pessimism. The stocks are in an opportunity. I know decoupling is not a very good word to be used. But for once, we think Indian markets are decoupling with the rest of the world, and Asia is bound to outperform. Europe is the elephant in the room, and US will take time with a mild recession to get over this rate hike.
But do you think the inflationary numbers or the inflation overall here has peaked, or is it too soon to celebrate?
No, I would say take it with a pinch of salt. If consumption is high, there will be a little bit of logistic issue. But Karunya, for God's sake, crude is not 120, it's closer to 80. And all we think is that we are whining, why is what and why is what. We are in a very, very sweet spot than 20 years back when crude at 120 meant the end of the rupee and the balance. This time it has been very, very well appreciated, accepted, and there is a waiting period in cars. I'm just giving you a small alibi. So I think inflation numbers are for the macros to see. The greed element of missing out on the rally is far greater than all these small, data points which can come and go and change very fast. We think you will see much more positivity as far as inflation receding in the coming weeks. Also, by the way, don't forget that JP Morgan is contemplating putting Indian bonds on the global index, where our yields are falling more because access to capital by most of the debt funds will be easier, and good corporates will be able to raise capital.
Okay, here's hoping that, all of this and more pans out for India. Thank you so much, Mr. Bhasin, for joining in and sharing your thoughts with us on the markets and the big picture that one should look at. Back to technicals once again with Rajesh Palvia. We want to understand how some of these stocks are likely to perform today, the ones which are, going to be in the limelight on back of some news flow. The first name I want to flag off is Ami Organics. Plutus Wealth has bought close to 2.5% stake, about 9.5 lakh shares in the company. Small Cap World Fund has also bought fresh 16 lakh shares, which is close to 4.4% stake in the company. The buying price has been 1,037.3 rupees, 0.3 per share. Ami Organics yesterday shut shop firmly above that 1100 mark. But Rajesh, last 2 months, if we look at the returns, they are largely flattish. Talk to us about the way forward for this one.
So looking at the yesterday's price action, Ami Organic managed to give flag pattern breakout on the daily chart, which clearly indicates that now if Stoxx continues to hold above 1080 level, then possibly upside target we can see in the short term towards 1200 to 1240, which is the previous swing high level. So if at all stock manages to cross about 1240 level, then we can see, stock may continue furthermore upside momentum in the short to medium term basis. So as of now, looking at the near term as well as on the short term pattern, we feel that, stock should hold at the current level. Also, even in the decline also, one can add the position. 1030, 1040 is important support area on the downside. And looking at the breakout, we feel that, that this stock can, continue its upward momentum toward 1240, which is the immediate target which we are expecting in the Ami Organic.
Okay. The next stock is Bharat Forge on our radar. Its subsidiary Kalyani Powertrain and Harbinger Motors are looking to develop electrified drivetrains for commercial trucking industry. What they'll be targeting essentially will be class 3 through 8 markets across different geographies. Talk to us about Bharat Forge. Sanjeev Bhasin was just speaking to us and he was quite upbeat on the company. But if we look at purely the technical standpoint, is it looking as attractive?
So technical setup is also positive. Since last 3 weeks, we are seeing higher high formation in the stock, and now stock is approaching towards its multiple resistance zone, level, which is at around 800 level. So if stock manages to cross above 800 level, then possibly stock may continue further upside momentum towards 860, 880 in the short to medium term basis. So as of now, a view is positive as stock is now currently trading above near-term moving averages of 20-day, 50-day moving average. And all momentum and strength indicators also indicating that, stock may continue its, uptrend. So buy on dip should be the strategy as we are seeing that, downtick in the GX. Maybe some downtick can be there in Bharat Forge also, but we will advise that, one can buy and accumulate the stock in the decline towards 770, 775 is good buying zone for the near term basis. Keep stop loss of 760, upside target is 860, 870.
Okay. And the third name again from the broader markets is going to be KEC International. They've bagged orders worth 1,100 crores across various businesses, including T&D and railways. Essentially, these projects will be, carried out in India, Middle East and Africa, and 1,100, like I said, is the order value. How are the technicals looking for KEC? Last 1 week has been fairly upbeat for this counter, but will that sort of upward momentum continue?
So after corrective action, stock was in consolidation. Since last 3-4 weeks, we have seen some sort of buying action in the stock. The stock has formed a base at around 400 level. So now 400 is important level on the downside.
Okay. All right. Let's check out some of our viewer queries as well. They've been posting a few questions on our live feed. And in fact, today, I'm sure a lot of investors are a bit jittery about how the market will open and what are the key levels to watch, which we have, by the way, already flagged off thanks to Rajesh. But let's talk about some queries. The first question I want to address is from Arindam Mukherjee. He wants your guidance on Adani Green Energy. Talk to us about how this one's looking on the technicals. Adani, in fact, the entire group stocks have done phenomenally well all of this year. But will it be impacted by the overall market sentiment or will it continue to move up?
So most of the Adani stocks are moving in different orbit, and now looking at the Adani Green setup since last 7-8 trading session, stock is consolidating in very narrow range. So looking at the setup, the immediate support area for the stock, even any knee-jerk reactions comes in this stock 22.
Okay, I think there is
30 is important. If stocks continues to hold 2230 level, then possibly stock will move further higher towards 2450, 2500 level.
Okay, all right. How about Bajaj Finserv? Sanjay Chaudhary is writing to us and he would like your advice on this counter, and he's also asking for a good level or a good entry point into this counter. What's your advice?
So overall setup for Bajaj Finserv is also positive. After adjusted price, we expect that 1740, 1730 is a good entry level again in the decline. On the higher side, if stock crosses above 1820 level, then possibly it will move further higher towards 1900 level also.
Okay, moving on to the third query. This is from Avinash. He wants your advice on CAMS. How is it looking on the chart?
So since last 3 weeks, we have seen, a strong rally in the stock. Stock managed to give breakout of its triangular formation on the weekly chart. Looking at the breakout, we expect if stocks continues to hold about 2550, then possibly upside target in the short term is around 2800. So overall setup is positive. One should hold the stock for upside target of 2800. Keep stop loss of 2540.
Okay. Let's shift gears and talk about some of these chemical companies. Ashokan has written to us and he wants your view on Aarti Drugs. How's this one looking on the technicals?
So Drug is still in consolidation range. Looking at the near term as well as short term setup, we feel that if stock crosses above 500, then possibly stock can show good upward momentum in the short term also. But till the time stock is below 500 level, we feel some more consolidation. But looking at the setup, we feel that sooner or later we will see a breakout above 500. So buy and accumulate at the current level. Keep stop loss of 430. On the breakout of 500, one can add further more position for upside target of 560, 580.
Okay, all right. I'm going to address the next query, and this is from Meet Doshi. He wants your advice on Amara Raja. In fact, Amara Raja and even Exide, we've been getting a lot of queries here. If you could just compare the two and tell us which one could be the right pick between the two.
So Amara Raja battery is now trading near to its important resistance area of 200-day moving average, and stock since last 4-5 trading session is trying to penetrate those levels. So once stock crosses above 558, 560 zone, then possibly stock can move further higher towards 600 also. After long consolidation, after a long downtrend, now stock is showing some bit of reversal. So at this current level, our view is bullish on the stock for near-term setup. Keep stop loss of 520. On the breakout of 560, one can add further more position for upside target of 600. If we talk about Exide also, Exide is also showing strength.
Okay, I think
since last 3 weeks, we feel if stocks continues to hold 170 level, next target should be around 190 or 200 level.
Okay. All right, we have a couple of more questions lined up. First one, Rahul Das is writing to us, and he wants your view on AU Small Finance Bank. It's perched at 675 odd rupees. Talk to us about the way forward here from current levels.
So in the previous session, stock has exhibited strong buying action. Open interest was also added on the buying side. So looking at the breakout on the near-term chart, if it's a hold above 660 level, then possibly next target should be 715 to 725. So our view is bullish. Breakout is already there on weekly as well as on the daily chart. So hold your position with stop loss of 655.
Okay, the last query, real quick. Peter William is saying, is it a good time to invest in Jubilant Pharma Nova? I think it's seen very, very wild moves last 3 months, but the returns have largely been listless. Talk to us about the way ahead.
So stock is in downtrend. Still, we feel that stock is likely to remain under pressure only till the stock not crosses above 340, 350, 355 zone. Stock will remain under pressure only. So at the current juncture, we will advise to avoid this stock because overall setup for Jubilant Pharma is on the bearish side only. Our view will change only about 355, 360 level. So as of now, our view is bearish on the stock.
Okay. One of our viewers is commenting, and also wanting to ask, considering markets open in the red substantially, some stocks, if you could suggest where swing trade can be tried. In fact, this is, what the last segment is about your picks and the stocks that look attractive to you, especially on a day like today. So Rajesh, why don't you flag them off?
So currently, first stock is Bharti Airtel. If at all it's a stock, even in the decline also, if it's stock available near to 770 level, one can buy Bharti Airtel because very strong breakout we have witnessed on the monthly as well as on the weekly chart. So Bharti Airtel is looking attractive. Keep stop loss of 755. Upside target we are expecting in the short term around 830. So Bharti Airtel will be the first stock. Second stock is from the capital goods because whole sector is in bullish trend. So Siemens, we are focusing at the current juncture. If stock is available near to 3020 level is a good opportunity to buy the stock again in the decline. Keep stop loss of 2995. Upside target we are projecting 3150. So Siemens and Bharti, these two stocks we will suggest to buy in the dips.
Okay, all right. Bharti Airtel and Siemens, two stocks that could be good buys on dip, especially like the way the market is indicating today we could see that opportunity come by today itself. Rajesh, great having you on board. Thank you so much for taking time out and sharing your thoughts on each and every of these individual stocks and helping our viewers out as always in their trading journey. With that, we're going to wrap it up on the show. Thank you so much for tuning in.